Welcome to the AACFB's 2021 Meet the Funder webinar series. My name is Monica Harper. I'm the Executive Director of the AACFB, and I'll be your host. Our presenters today are Corey Dunn and Caitlin Keefe from TimePayment. TimePayment is a funding source of the AACFB, and I'd like to thank them for their support of the association. Before I introduce TimePayment, I'd like to go over a few items to make this webinar more enjoyable and informative for everyone. During the presentation, you should see a Q&A box that allows you to ask questions. If you have any questions during the presentation, please submit your questions in the box and they should be answered by the end of the webinar. The entire webinar should take no more than about 30 to 45 minutes. For those of you who'd like to review this webinar at a later date, it will be posted on the 2021 Meet the Funder page of the AACFB website and will be emailed to all AACFB membership. At this time, I'd like to turn it over to the TimePayment team. It's all yours. Thank you.
Oh, great, Mike. So much for having me. Great to be a member of the AACFB. So my name is Corey Dam. I'm our Vice President, General Manager of our Capital Markets Group and Strategic Partnerships. All things third-party originations channel for TimePayment. We're joined as well by Caitlin Keefe, who's one of our broker account managers. So I think our objective today here really is to do sort of three things. One, who is TimePayments? An overview of those of you who have been a partner of ours for whether you're new or for some time. For those of you who have not yet started working with TimePayment, kind of a review of who we are, the toolkit that we can provide for both you and your vendor partners that we can help wrap around and provide additional service. And lastly, really answer any Q&A. I think TimePayment has been in the market for a little over 30 years, and we've got we're a firm in transition over the last number of years, kind of coming out of COVID before, and we'll talk more about this shortly, but kind of dispelling some of the old, I'll call it myths of TimePayment from before. So I think we know what's most important to the broker community is how can we help you make more money, approve more customers, and provide better service both to your end user and your prospective origination partner and your vendor, and do so kind of faster and easier. So we'll kind of look at each of those pieces individually. But I think one of a handful of things we want to highlight at the top is TimePayment's unique in its partnership program, and that we will actually pay up to 15 points on any approved transaction of any size. So whether that's a $5,000 transaction, a $50,000 transaction, or a $250,000 transaction, we offer up to 15 points on any of those. It's kind of if you can close it, we give you the opportunity to sell it. A second significant differentiator for TimePayment in the market is our ownership requirements. So many of our peers require 80+% ownership on any application to be considered. TimePayment will actually consider any guarantor of 1% owner or above. Additionally, and we'll dive into this here shortly, our dominance, kind of historical dominance in the market has been in this instant credit decision, sub $15,000 micro ticket market, but we've really evolved into what's become much more of a small ticket all around A to D credit provider. So to give some kind of background on TimePayments, we're a little over 30 years in the marketplace. What's sort of neat about our history is the fundamental credit model at TimePayment was actually written as a PhD thesis out of MIT in 1979, was deployed in the 80s, and has fundamentally been deployed with kind of little change and has held up in every fiscal cycle since its deployment in the 80s through recession, recovery, 08, even most recently our COVID crisis here. Really never stopped funding or kind of dramatically changed our coverage model through those periods. We're one of few funders, given that longevity and our significant backing. We have a $375 million warehouse line. We are, excuse me, having come out of being publicly traded. Historically, we were acquired by the private equity Fortress, who subsequently acquired by SoftBank. Kind of why that's important for you is in that transformation, a new leadership team was dropped in across 2018 and 2019 with the mission to really modernize TimePayment as a firm, provide more flexibility than historically the firm had provided, and really deliver a next generation broker funding platform for you to take advantage of. So right now we're a little over 170 employees. Our headquarters is in Burlington, Massachusetts, but we have staff now. Post kind of in COVID, we significantly went remote, so we have staff all over the country, but a significant presence on the West Coast and kind of across the country. Again, from a why that's important to you standpoint, is we have coverage throughout kind of all business working hours in all time zones. So part of that new leadership drop-in was, excuse me, a CEO who's has significant background in technology, who's driving our next generation initiatives to deliver faster approvals to more credits in more places, and significant kind of addition to the experience level on the leadership side from other equipment finance companies and other brokers from the community. So prior to joining TimePayment in 2018, I spent the last 10 years as a broker myself, so I can relate to much of the day-to-day challenges and both of originating and finding a great funding source partner. So a quick review of what our portfolio mix looks like. So TimePayment's truly an asset agnostic lender. We're a real credit-based lender. What that means from a coverage standpoint is we'll fund in our kind of internal joke is we're experts in funding in 27 verticals across effectively every industry, but today titled vehicles. We don't today have a titled vehicle product or titled product, and that's something I think coming soon as we're working on. But our core three competencies or fundings are in the hospitality business. We have it classified here as restaurant, but it's really all things front and back of the house, from your small mom and pop operator to your enterprise franchise collective with 20, 30, 40 stores, to our water business, and health and beauty, which is kind of a composition of both commercial fitness business and aesthetic lasers and some of the ancillary cottages around those spaces. But we do fund, again, across an additional 27 verticals. So truly asset agnostic and very much focused on the credit of both the borrower and the corporate entity. What is, I think, unique for our risk-based pricing model is we have 10 credit tiers. So being a credit-based lender, focusing on not only just FICO score of that borrower, but what are the attributes within that FICO that whether strength of trade lines, debt, historical debt or max debt load, number of trade lines, history of credit, and a number of the other kind of metadata points that make up that FICO score. Our model is a risk-adjusted model that helps us cover everything from your enterprise, again, A, AA credit borrower to the 550 FICO. I have a dream restaurant startup operator that has very few other funding sources. Will serve that criteria. to help kind of give a better view of what our current portfolio mix is. And really what I want to highlight here is two primary points. One, and kind of from an orientation standpoint, we have segmentation of our portfolio by individual transaction size. You'll see a significant number by quantity of our transactions are those sub 10K transactions. That's largely driven by our historical presence in both our water and security business, which is many thousands of contracts at sub $5,000 that we've been carrying through the portfolio. But by dollar size of transactions, you'll see more than, roughly 20% of the dollars in our portfolio are transactions over $15,000. And that's really a focus of TimePayments going forward, is moving into funding larger tickets, larger small ticket transactions across that credit spectrum. So, and we'll talk more about our different lease types. Caitlin will talk about our offering types here shortly. The by and large, where 2/3 of our portfolio is our lease to own product. We fund transactions from a term length standpoint from 13 months to 60 months, and for larger transactions, our warehouse will let us go out to 72 months for the right transaction and the right asset type that warrant a longer term. And we'll kind of drive home a few of these points a number of times throughout our deck here. Is I think historically TimePayment's been perceived as only this micro ticket, crappy credit, PG only, last shop to try funding source. And a big part of our participation today and moving forward, both the AACFB and the community, is to help dispel and retell the story of what is the new TimePayment. So actually 36% of our funding type for our portfolio is corp only transactions. And you'll see we do have a consumer product that's the product that's we're sunsetting out of. So we'll really focus on both personal guarantee and our corp only offerings. Something I think is important to highlight, and I don't think that it is well known for both our current partners and prospective new partners, is the level of partnership that we can offer in both to you directly, but for particular programs. So the idea of the view here is we have our out of the box offering that we're talking about today, where sign up, we can work on individual transactions, one-off across different industries. But as you discover, or maybe rather uncover, new opportunities with that are a little more programmatic in nature with a vendor, a manufacturer, or a franchisor, we have a number of different value-added services that we can help work together with you in a white label fashion to drive, let's call it, if it's a vendor who sells largely e-commerce, web integrations where they can offer as low as buttons on their website, API integrations, both maybe for you, or your vendor, if you have a vendor program that's working out of Salesforce, for example, integrations together to help streamline both application receipts, approval, and communication through to kind of full white labeling, discounting, and for kind of larger transactions or larger programmatic opportunities, true wraparound customization. So as by way of example, we had a partner recently who won the opportunity for a prospective vendor franchise program, where that franchisor mandated a new piece of equipment be purchased by all the franchisees. Our partner won the relationship together with that franchisor and the vendor. And we wanted to provide, they together wanted to provide to their franchisee community what looked like a white label application coming from the franchisor a dedicated credit product for their for that particular offering, with features like guaranteed approvals with certain level of credit thresholds or credit enhancements. And we work together with them to provide dedicated landing pages, custom application, kind of full white label solutions. So our aim here in our, I'll call it TimePayment 2.0, is to really become more of a flexible, integrative partner together with you. And as you're uncovering these larger, more systematic vendor manufacturer programs, options to help you become stickier in those relationships. And those can take, as we all know, kind of 1,000 different forms along the way. But our encouragement is, as you're trying to win those programs or have won those programs, we can partner together with you to deliver those the custom enhancements to help you become stickier and help you have a step above your prospective competitor in that scenario who's offering just a simple application, a traditional vendor finance offering. So I think two of our platform features that we make available both right out of the box are our Info Hub platform, which is really our vendor or our broker facing utility that allows you to enter applications, track what's happening with that application through its life cycle. Our intent is really to provide an environment that's self-service as much as possible, and that's little touch or requirement for communication back and forth between your prospective customer, yourself, funding source, and Caitlin will talk more about that and kind of some of those features through to our My Account platform, which is customer facing. So post funding, the ability for the customer to manage their own account, to make electronic payments, to see how many payments they have left, see how many payments they've made, all again in an environment that's as much as we can make it easy to navigate, hyper functional, and self-service for both you and your customer base. And Caitlin, we were having a little camera trouble, so apologies for that. She's audio only here, but I think as Caitlin and her colleague Ashley Cummings, who managed the day-to-day broker relationship business together with their support team on our operations side, we wanted to pool together a question set. It kind of became less FAQ and more, I'd call it Mythbusters, right? So I think many questions that come from our broker community, both current or new, on I think what has come very much from legacy time payments, and where the firm used to have a very tight box around the places they would play in the market. So first of those is we're only funding transactions $500 to $15,000. Reality is our warehouse line actually allows any individual borrower exposure up to $1.5 million of receivables. So we're regularly funding transactions that are 50, 75K, $250,000 kind of across our industry base. And I touched earlier on this, but again, corp only business, I think Caitlin will probably second me here, but one of the most popular misnomers is that we only write personal guarantee business. But in fact, again, and you saw in our portfolio mix, roughly 30% of our originations are actually corp only transactions. Two of our more I think flexible offerings against our peers or functions is both our cosigner policy and our ownership disclosure policy, or not a disclosure, but requirement policy. So co-signers, while many of our peers in the market require that co-signer to be an owner in the business or a spouse of that owner, will actually accept non-owners of the business if they're blood related, and additionally spouses, whether they're the owner or not. Third, from a again, ownership to sign on the contract requirement, most other funding sources require at least 80%, if not 100% ownership, not only disclosed, but actually signing on a contract. TimePayment's unique that though we prefer very much, again, want to have as, like any of us are going to say, as much of the ownership tied up as we can. Our actual requirement is only 1% of ownership or better to consider an application for approval and both actually execute the lease contract. And a couple more things here, and I won't read every kind of word off this slide because I know you're all capable of reading yourself here, but two more things I want to highlight are we have no commission clawback. And you'll see in our broker agreement when you sign up, there's no commission clawback language. And I think secondly, and for me, this is one that means a lot, having spent a decade as a broker and always worrying about exposing my prospective vendor or customer to another funding sources. Are they going to get prospected by another team within that funding source? Are they going to steal my vendor? But I think historically, TimePayment may have had a reputation, unfortunately, an infamous call it like representation by example, where we did not have an adequate Chinese wall built between our direct sales team and our third-party originations team. I think one of the first things that we wanted to address in the new leadership team was to stop that. It's a very small world. We very much value our third-party origination partners. It's a little over 35% of our annual originations across the firm, and it's a growing number we're working to drive up. But not only have we better established that wall between our direct sales organization and our third-party originators, but we have the language in we commit to it by putting it in our contract. So we have the language in our broker contract. I've got a little snippet of it here. I'm sure it's probably too small to read, but that we're contractually agreeing to you that we're not going to solicit a vendor that you bring to us. And we've established processes along the way in our CRM, both our communication methodologies to prevent the ability for that to happen. There's this kind of is the rule. Being a large firm with a significant database, there's, as I'm sure you're all familiar with, duplicate accounts, duplicate data records that happen from time to time. And we encourage you in any instance where we may inadvertently cross this line to tell myself, Caitlin, Ashley, our team right away at the instance so we can address it. And we're very committed to honoring our partnership with you and your origination sources, be it manufacturer, vendor, or even repeat customer. Caitlin, I'll turn it over to you to talk more about kind of some of the features within InfoHub and some of the cool tools that are available for our broker partners.
Awesome. Thank you. So I am Caitlin. I have been with TimePayment about 7 years now. Time flies. It feels like I just started yesterday, but I do have experience in the company from our back end. I did start on the collections team, so I know a lot of the general questions your customers might have after the deal funds. Do they need proof of insurance? Yes, they do. And anything that we might need along with that. But most of my day-to-day with the people that I do know in this call is helping you guys get the deal go from submitted to funded as quickly as possible. We all know the longer a deal sits, the less likely it is to fund. So we know speed is definitely something that we need to stand behind and try to keep everything moving as quickly as we can. That is why we are constantly working on our InfoHub portal. One of my favorite features is the customer quote tool. It allows you to generate a quote quick, clean for the customer. You can print the quote. You can play around with the numbers. If they change the order and it becomes less, you write there the total financed amount section. You can change the amount and recalculate the quote. If you're quoting them the commercial lease to own program option and they're saying the payments are too high, we do offer several different programs, so you can always edit quote products to pick a different program. One that we just recently released was the Deferred program. So that one, it's really helps with customers that are on a budget now. It's just 100 due at signing and then nothing due for 90 days. So they can sign the contract, make their small payable amount now, and pretty much not have to worry about the payments until the new year comes around. But that's definitely something that you can just the edit quote products, pick the new program, and it'll update that page right there for you. When you do print a quote, it does give a pretty clean PDF copy for you to email over to the customer, um, which I think is definitely helpful when some people want to see the quote on paper. But if you do have a customer that just right over the phone picks a term right away, you can go ahead and go right back to the app details page and go ahead and get started with creating the lease agreement. We do allow the brokers to create their own lease agreements at any time, even outside of TimePayment's business hours. So if the customer's on the phone with you at 9, 10 o'clock at night going over terms and they pick it, you can get the lease agreement created and sent out to them the same time.
I think one of the cool things additionally about the quote tool that you just touched on, Caitlin, is this is a mobile ready 24/7 wherever you are, whether you're on your phone, your iPad, you're at your laptop, you can access any particular transaction. You can very quickly quote or adjust the quote, whether you're reading that again kind of on the phone, as Caitlin said, or they want a hard copy. That's kind of an easy, super easy tool to provide that kind of functionality. And I think for our broker partners, an important point to point out is in that quote printout, in this view, as you're building your commission into these transactions, that's not line itemed out anywhere. So when you send your quote out to your customer, you're not saying you're financing $15,000 and oh, by the way, you're paying me 15 points along the way. That's designed to be customer facing in a very kind of simple functionality within the InfoHub platform.
And then as I was mentioning with the different program options that we do have several program options to try to fit the customer's needs, however whatever they are looking for. If their main concern is their budget now, so they want the lowest monthly payment, the fair market value lease would be a great option there. That is the lowest payment options possible for them. If the main overall concern is how much they're paying for, a lot of customers just call it the interest rate, the turbo lease option is a perfect program for them that the payments are much larger, but it has the least amount of finance charges built into it. And then all of our programs are lease to own options. So the customers have the option to either return the equipment or just purchase the fair market value at the end of the lease. It varies depending on which program. For the fair market value lease, it's typically 10% of the total receivable. With the turbo lease, it's just the final payment, that last payment, they own it. With the lease to own, you'll see those contracts say 21, 33 months. It's equivalent to 3 monthly payments, so it still rounds out to be 24 total or 36 payments if they want to own it. And for the good qualifying customers, we do also have a dollar buyout option, except for California. But we do also work with split funding lease options. So multiple vendors on one deal makes it easier for the customer. They only have to sign one contract, and we take care of paying everyone separately. So each vendor is paid for separately along with you guys with your commission. And then when it comes to the electronic documents, same thing, you can create documents anytime, 10, 11 o'clock at night, wherever is your best working hour for you. They are really, I think, quick to send out as long as the customer has an email address and they're even not very tech savvy. It should be easy for them to sign the lease agreement. It pretty much walks them through every step of the way from adopting their signature to signing them. And then it comes back to us right away to be reviewed. If for any reason the customer's telling you that they've signed it and we're not logging it, Ashley and I do have access to DocuSign, so you can always reach out and we can hop in to see what's going on. If they viewed them but didn't finally hit the finish button, it won't be a completed signature. So we can always jump in to work that out and see what's in there.
I think what's and Caitlin highlighted this, but to drive it home, our eDoc solution is self-serve. So if you can, right from Info Hub within that individual transaction, your closing terms with that customer, whether you're on the phone with them, closing terms right away, you can create that contract yourself and have it immediately sent to that customer via again, DocuSign eDoc, that's mobile ready. They can sign on their phone, tablet, on their computer. And it again, of our aim to deliver a faster, easier, simple financing tool for you to offer your customer base. I think the self-serve functionality of, we call it Ready Docs, but our eDoc solution, I think it is a significant tool to help you execute on that fast, easy funding solution for both your customer and also you're communicating together with that vendor or manufacturer on the ability to get a contract. As soon as that approval is back, that customer agrees on terms, you can get a contract to them in minutes.
And then this gives us a quick little snapshot of how it goes with the broker community, from submitting the vendors to the customer application. Once the customer's approved, you can go ahead and quote them right away. The thing that I do love about TimePayment is once the vendor's approved with you, that's a one and done step. So most of the time you're only going to be looking at 5 steps instead of all 6 here. But with the customers, as soon as the vendor's approved, you can submit multiple customers under the same vendor. We do offer an API integration that will help automate that process for you, so you don't have to manually go into Info Hub to submit everyone. We can always get your developer team connected with our developer team and get the API integration set up. Once the customer's in, approved, has been quoted, you go ahead and make the lease agreements, send them out for the eDocs and the e-signatures. That is definitely the fastest way to get the doc signed and back to us. With step 5, it does depend on how the vendor is approved for how we'll be doing the delivery and verification of equipment. A lot of people are not aware that we do have a retail program. So if the vendor has an online shopping cart or a retail location, we approve them for the retail program. There's a separate form that the customer signs saying they either already have equipment or it's being delivered as agreed. And if the deal's under 15,000, we just fund it right away. If it's over 15,000, we will need to do an identity verification call with the owner. But once that's done, it's just like a 2-minute call. We then release the funds to the vendor, 100% of the funds to the vendor, and the commission to the brokers the same day. If they don't qualify for retail, we do offer pre-funding options, and that's something we can definitely discuss once you guys have vendors in and approved with us.
So I think something to highlight on the vendor setup process, we get this question a lot, where TimePayment's unique in that we ask our broker partners to set their vendor up or submit their vendor. Really, we encourage you to do it ahead of submitting the first transaction. And our aim here is to not hold up funding of a transaction after a lease contract or contract has been signed and executed with the customer. So the aim is really to ensure we have proper payment information, proper payment methodology, right contact information for that vendor ahead of having to process any transaction. So both as soon as a contract is executed, we're able to move to getting either purchase order or pre-fund in this case.
And ACH is definitely recommended for everyone around, brokers and vendors. It's same day funding. Everyone wants to be paid as fast as possible. Another great info hub feature that we have is we do have a My Vendors report where you can jump in and check to see how they're already set up to be paid. It'll show the last 4 digits of the account number. So if they are already on ACH, but it may have changed, we can go ahead and get that updated before the customer deals funds so we don't have any delays in the funding process. And this kind of just details an overview of the credit guidelines here. It doesn't go exactly like this every time. It's not like a rule book. It's just a guidelines with showing you where the customer may fall with our 10 different credit tiers. So in order for somebody to qualify for the A, AA, or AAA, they do need to have strong business and personal credit. A lot of the times you'll see it does say that P, established business, 25,000 under 2 years time in business. It's saying that most startups will cap at 25,000. That's not necessarily true. We do look at cross-corp guarantees and they don't have to be in the same industry. So I actually recently funded a deal. It was a startup restaurant, just maybe a month time in business. And the owner had an insurance company with very strong business credit. We got them approved for 150,000. So it's definitely doable. The cross corps don't have to be the same industry, but if you know it's just mutual ownership and they're jumping into a new industry, feel free to send that over and we'd love to take a look at those.
You brought that up. So this, I know that there's a lot here in this table. This is a snapshot from our broker kit, so you can find this table and sort of additional supporting detail both in our broker kit. That's, I think Monica said at the start, this will be available on the AACFB site and then the US or their YouTube channel as well. The aim here is give some guidance. So if you're going into pre-close a transaction, you're having that preview conversation, you've got a feel for, hey, is it a fit for time payment and where may it score? And Caitlin, thanks for bringing up the cross-corp point. That's something we should have probably added on our Mythbusters slide. But, certainly a unique consideration from the time payment credit team, considering non-related corporate entities that with shared ownership, regardless of industry, as a corp-only entity to, or as a cross-corporate guarantor to help secure additional funding. I think kind of a little more detail here on the parameters around AAA and our enterprise credit pricing. Again, our rate card spread starts in high single digits and moves up from there based on that credit scoring algorithm that we have to play. We will fund, again, to kind of drive home here, transactions from a size $500 and up to that $1.5 million receivables. Frankly, don't send me a lot of $500 deals. As we all know, they're kind of as much work as the $50,000 deal. But with the time payment platform, its automation and scoring and its ability to self-serve is still in our commitment to 15 points. As much as up to 15 points as you can price and build into a transaction. There's still profitability to be had in those smaller transactions, but as much limited touch as we can support. And kind of highlight here before we move to Q&A, we have Caitlin on the call with us here, and her colleague Ashley Cummings that are our daily relationship managers. They're the ladies calling on you, trying to find new opportunities to find partnerships in your vendor programs or in your originations channels, and help move transactions together through the funnel, from doc receipt through to close of funding. They're supported by an operations team that effectively works in queue. So our philosophy is moving from that kind of individual point of contact, who you become reliant on their business hours, excuse me, are they at work, are they on vacation, who's backup, to this kind of tripod approach of two individual day-to-day contact points who will work together hand in hand. They're effectively joined at the hip. It's amazing how well they've been able to kind of streamline the queue to the operations team that supports behind them. So to set up, and Caitlin, I realize I'm stealing your last slide here, so apologies, but if you are a new broker looking to sign up, happy to have any additional discovery phone calls or information phone calls. We'll provide contact information both here in the slide and in follow-up, or you can, again, kind of self-serve from the TimePayment website. If you go to TimePayment.com, brokers in the top left menu bar, you actually complete the application with a sign-up form and see our partnership agreement right there on the site. So kind of from sign-up, operations team process will be back to you kind of typically within a day or two, and Caitlin or Ashley will reach out to have kind of an initial review of the full functionality within InfoHub, and whether that's training you, train the trainer, or train any individual in your organization actually self-serve and enter applications and navigate their way through the platform. Having, I kind of mentioned this earlier, having been a broker for 10 years before joining, and having worked with TimePayment and dozens of other funding sources, I think the InfoHub platform is far and away the easiest, most informative, and navigable lender side platform that at least I've had exposure to. So strongly encourage everybody to spend time with the team, getting to know their way around for what you can't figure out is as simple as point and click in lots of places now that we spend all of our time at home or at a computer working through this these days. So Caitlin, if you have anything else you want to close with, or we'll open up to Q&A. I see kind of a number in the chat here, so we can work through that.
Yeah, definitely. Ashley and I are always here for you guys. So we, like Corey said, we both work the inbox together. We have a team inbox broker desk at timepayment.com. If you ever want to send any questions there, one of us will grab it as soon as possible. I'm out in Massachusetts, but Ashley is out in Arizona, so we're even spread out to give you guys just more coverage throughout the day. If there's anything you guys want to share with us on the side, we love getting feedback. InfoHub features, even if it's you worked with us in the past and you don't right now because of something that happened along the way, we'd love to hear it. We'd love to know what happened, how we can work with you together in the future, and hopefully find more financing options for your customers.
We do have a couple of questions. First question is, does the 90-day deferred program have a deal size max?
It does not. As far as I know, I did also try to double check this when I saw the question come up. There's nothing I have anywhere saying that there's a cap, so we're good to go.
Great. And again, if anybody wants to ask a question, please go ahead and type that in the chat, or you can raise your hand and I'll unmute you. The next question is, will you do a verbal before funding?
We can at times, just depending on how the vendor's approved. So If the vendor, like if it's a retail deal over 15,000, we have to do an identity verbal with the customer, not to verify that they have the equipment, just that they are the owner on the application and they are aware of the application going through for the monthly payment amounts. If the vendor is not approved for pre-funding for any reason, that's really not very common. Most of our vendors do get either retail or pre-funding options. But if not, then we would need to complete an equipment verbal before we could release the funds. But again, like I said, it's not very common, and I'm always willing to dig in to see if there's anything we can do to get the vendor set up under our retailer program, pre-funding program options.
I'm not seeing any other questions, but again, if anybody has any questions offline, oh, here comes another one. For multi-vendor deals, is commission released after the final vendor is paid?
Yes, if for any reason one of the vendors is not set up for 100% pre-funding, if it's example of 50% pre-funding for one of the vendors, but the other vendor has retail, we would release 100% of the funds to the retail vendor, 50% of the funds to the other vendor, and then we would need to complete that equipment verification call before we could release the remaining 50% and the commission. The commission's always held until the deal's fully commenced, which just means any equipment verification call if needed.
Okay. Do you finance leasing equipment or finance or lease equipment for cannabis?
Unfortunately, I don't believe we do cannabis at this time. We are able to do CBD industry, but it's just a fine line between if it's cannabis or CBD, if we'd be able to do it.
Okay. Will TimePayment at some point consider construction or vendor accounts?
Yes. Excuse me. And we will do so currently. I kind of teased a titled vehicle program coming soon that is in the works, but currently, really our restricted funding list is sort of your standard guns, flies, adult industry. The cannabis line is sort of a moving one. I think Caitlin did a good job of describing it. It's largely if it touches the recreational cannabis business, that's not a fit for us. The CBD, anything touching CBD, we can fund. Manufacturing, we can't fund.
Okay. Do you offer consumer financing?
We historically have had a fairly robust consumer financing offering. We do still offer it. It is it's a product we're kind of slowly sunsetting. So we're considering new consumer finance programs kind of in a case-by-case basis, but certainly encourage you to reach out where we are much more interested in a prospective consumer program than individual sort of one-off consumer transactions.
Okay. That is all the.
I have one question that got texted to me in talking earlier on our integrated vendor solutions. So when I'll use kind of going back again to that franchise program example. Programmatically, if we set up a partnership together that is to support a franchise, a manufacturer, a vendor, we'll continue to pay commission on that program and through its active life cycle to the broker, whether I don't want to say like whether or not, but even in the instance that we're able to kind of fully or semi-fully automate the participation of that particular broker out of any individual transaction, we'll honor throughout the life cycle of that relationship. So I wanted to make sure we touched on that.
Great. as the software industry has moved from boxed installed to software as a service, will TimePayment consider software as a service contract financing?
Yes, is the short answer. Yes, and to kind of elaborate further on that, we're very interested in designing programs together with you and your prospective partners who are trying to move their either supplement or transition their current offering from a cash offering into something that looks and feels to the customer like a software as a service, or now we're starting to hear the equipment as a service model kind of more and more. So those constructive programs are certainly things we can facilitate, and also I think they create selling points into, particularly in the technology side, vendors who are trying to augment their revenue model, where providing sales financing can make that customer experience sort of look and feel like it's an as a service kind of sale. So certainly.
Okay, great. Now it looks like that's all the questions. So with that, we'll wrap this up, and I want to thank TimePayment and you, Corey and Caitlin, for your time today, and we hope to see you at a future event, and want to thank everybody for their time today.
Yeah, thank you for having us, and I'll tell you, I'll be at the show here coming up in Nashville and in Charlotte. We won't have booths this year, but find me walking the floor, reach out to the team. We'd love to set up time to connect and spend a little more time in education, or go out and get a table together for lunch or at the bar after the show.
Great. Oh, we have one. Oh, just thank you so much. One last comment. So from everybody, thank you so much and have a great day.
Thanks. Bye.